and welcome to Closing Day. Closing Day is a local real estate show that covers everything in real estate from the very first moment you think about buying a home right up to closing day. Now there's many different things that happen between that and closing day, and we cover most of those topics on through these shows. My name is Jeff Delgrand, I'm your host, and today's topic, what we're going to cover is called a reverse mortgage. Seems like a mouthful. And reverse mortgage is, if you've never heard of it, we're going to cover it today. If you have heard of it, you may have heard of some things about it that are incorrect because they have them in the US, but in Canada, they're quite a bit different. So today with me, I have Sean Russell from Home Equity Bank, and Sean's going to help us with the details of a reverse mortgage. Sean, thank you very much for coming on the show.
Thank you, Jeff.
Now, Sean, I guess the very first question is, what is a reverse mortgage?
Well, a reverse mortgage is really a fancy name for allowing somebody to access the equity in their home.
Okay.
So that's all we're doing, through a loan facility.
Yeah.
So they need some funds, they've run out of their investments, they're healthy, they're living longer, they want or need some extra funds,
Yeah.
and we can do that by releasing some of the equity from their home.
All right. Now, can anyone do this?
No, we do work with a very specific group of individuals.
Yeah.
55 is as young as we'll go with this product.
All right.
And then there is no maximum age. But the individuals on title on the home, husband and wife, or husband or wife, need to be 55 or older.
All right, so 55 or older. So walk me through the steps of a reverse mortgage. Someone comes and let's say they watch this show and they think, I would like to get one of those. What steps would they go through?
Sure. The very first step is they would contact you or somebody in the industry,
yeah.
somebody like yourself.
Thanks.
And basically, we would start the process by getting in touch with me as the BDM at Home Equity Bank.
Yeah.
And the process is very simple. We're going to put an application into our system.
Yeah.
We're going to collect some data from the client, some of their identification, of course, some information about their home. We're going to take an appraisal on the property.
Right.
Because for us as a company, that is the most important factor. We need to get an actual firm value of that property so we can work the numbers from there. So that's the starting process.
Right.
And then once we get all those numbers together, we're going to put the contract or the package together for the client, and we move from there. The funding process, Jeff, just so you know, from start to finish is about 4 weeks.
Oh, that's relatively quick
Yeah,
when
pretty
you talk
quick,
about
yeah.
a process like that. So, I mean, I love this idea because people spend their whole lives paying their mortgages off. You know, they end up with a home that's got tons of equity in it and sometimes no mortgage at all, but they don't have a lifestyle. So this is a way you're saying for them to tap into the equity. Now, how does the money come to them?
It's pretty straightforward. So at the very tail end of the process, the client is going to meet with ILA, Independent Legal Advice.
Right.
And they're going to sign off on the final documents at ILA, and then we're going to fund the money into their bank account within 48 hours from that signing.
Okay, now, is it a lump sum? How is it done?
It's really up to the client. We have two options. So the first one, and our most popular product, is our CHIP reverse mortgage, which is a lump sum product. So those are for clients that say, I need X amount of dollars today for a particular thing. Could be a new roof on their house, could be to give some money to their kids or grandkids, but they need the money today.
Okay.
The second option is a product called our Income Advantage product, and that's a hybrid. So they could take a little bit of a lump sum with that product, but also provide themselves either a monthly, quarterly, or semi-annual draw on income. So if they qualified, say, for $100,000, Jeff,
Yeah.
they could take that out in increments. $1,000 a month until it runs out, $2,000 a quarter until it runs out, so it provides them some income options.
That's neat. It's kind of like making your house into an ATM machine.
Almost, with the benefit of no payments. So our product does not require any payments for the clients.
Really?
Correct.
Okay. So you said you can start at 55. All right. So let's say I'm 55 and I want to get a reverse mortgage on my house. What are the limitations? Do I get all my money? Do I?
That's a wonderful question. And bear in mind, with 55-year-olds, we do very little business, and I'll explain why. If you were interested, Jeff, in this product, we would look at 3 factors to start the process. We're going to look at your age,
Yeah.
we're going to look at the location of your home, and we're going to look at the type of home.
Right.
So I'm going to start at who would qualify for our maximum of 55% loan to value. So that is our maximum. We will not lend more than 55% of the value of the home.
Okay.
In order to reach that maximum, you'd be looking at about a 75-year-old couple living somewhere in the GTA in a fully detached home. That's somebody that would qualify for our maximum of 55% loan to value.
Right.
Now, if you're dealing with a 55-year-old, you're going to go all the way down to about 18% loan to value. And the reason we go that low is we want to stay very, very conservative with this product. We don't want our clients running out of equity much later in life when they're in their 70s or 80s. We want to make sure there's enough equity still in the home that they can pass on to the beneficiaries.
Okay. Now that's, so you two, you said there's going to be equity in their home, hopefully to pass on to the beneficiaries.
Correct. That's our goal, is we want to make sure all of our clients have some equity left at the end of this process so that when they do eventually pass away, that there's something left to give to their beneficiaries. That's why we're very conservative with our loan to value numbers.
Okay. And what type of interest is on a mortgage like this?
Great question. We have a number of different interest rate term options that we offer, but on average, we're looking at about 5%.
Oh, really?
On average, just to sort of generalize it.
All right. So that seems fairly reasonable for what you're doing. Now, this is a home equity loan? Is that what you call it?
It is a home equity loan, correct. So we are taking equity out of the home and providing that to the clients in the form of a loan. The interest is accumulating on that, Jeff, because they're not making any payments. So if you started at $100,000, over 10 years, that $100,000 is going to grow because you're not making any payments. But what our clients often forget sometimes is that the entire value of their home is also growing at some arbitrary rate.
Right.
I can't really put a peg on that, but I mean, we know it's been amazing over the last 15 years, but even if you said it's growing at 2 or 3% a year, very conservative, you're still going to see that wonderful home growth, and even though your reverse mortgage is growing, there's still lots of equity left at the end of the process.
That's really good news. The TD Bank website actually has tracked home equity appreciation since the beginning of time, and the average is 6.2%.
I've seen that absolutely. So we in our illustrations, we use 3% in our home growth to stay very conservative. And even with that 3%, there's still plenty of equity left after 15, 20, 25 years.
That's good news. That's good news. Now, there's all types of, what can I say, combinations of people that own homes. There's like a single individual, there's married couples, there's newly married couples, and how do you handle all those different mixes? Like how?
Really what we're looking at is when we're looking at a property and the people that are living in that property, in order to do a reverse mortgage, we're dealing with the people that are on title.
Okay.
Now again, this is a matrimonial home. So in a situation where there's a husband and wife and one of the spouses is not on title, we still have to use both ages in our application because it's a matrimonial home. So we need to ensure that both parties are over 55, whether or not they're on title or not.
Okay. Now, in one of our previous shows, we had a lawyer explain to us the difference between owning a home, tenants in common, or joint tenancy.
Joint tenants, yes.
Now, tenants in common, if just a quick description is, if one of the co-owners of the property passes away, that portion of their ownership will go to their estate. Where in a joint tenancy, if they pass away, that portion of their ownership goes to the other person.
Yes.
I was joking around about the fact, the way I remember it is because if it's under joint tenancy, if somebody passes away, the other person gets the joint. It's just an easy way for everybody to remember.
Right.
So is that affected at all in the way you do the home equity mortgage? Or?
It is. That's a wonderful question. So we cannot do a reverse mortgage on tenants in common. So the titling of the property must be joint tenants for us to do a reverse mortgage. Now, it's very easy to alter, and I've done this in my 2 years here at the bank. I've had some situations where we had to do this. It is a very simple process to do if the parties are willing to change the ownership.
Right.
A lawyer gets involved, and it's a pretty quick and simple process. But if it is tenants in common, we cannot move forward until that's changed.
Okay. Now, you said an appraisal has to be done in the house.
Correct.
Now, what other work that needs to be done in the house? Cracked foundation, black mold in the, something like that. What happens if that happens?
It doesn't happen often, but where it does happen, we give the prospects, potential clients, the individuals, the opportunity to fix up the property. So our appraisers would go out, they would note that for us, they would alert us of it, and we would come back to whomever they're working with, whether it be a bank, whether it be through a mortgage broker, whomever they're working with, we would say, this is a situation, we need to repair these items before we move forward. And oftentimes what happens is we use some of the money from the funding to cover those costs. So we can actually do the reverse mortgage and just ensure that those things are going to get done, and then we can still move forward.
Okay, so they would still apply for the reverse mortgage. They can still be approved for the reverse mortgage. And if, let's say, there was $10,000 worth of repairs need to be done to the house, what, would the lawyer hold that money aside? Or
we would simply get some estimates, and then it would be part of the contract that out of the funding, we need to pay that $10,000 to get everything up to par, and then we move forward from there. So we could indeed move forward, even if there was some things that needed to be done.
Oh, so if we have, let's say, an older couple own a home and they know some work needs to be done, this could be a way to get the...
100%. This could be a way to get the funds to do that work.
Oh, that would be brilliant. Now, do you do that very often?
Not often,
Okay.
but we definitely can do it. It's a very easy process to do.
All right. What's the most common reverse mortgage? Like, what's the reason people mainly ask for a reverse mortgage? What's their motivations?
The 2 or 3 main ones, and I'll go through them. The first one is we're working with individuals that want to alleviate the stress of debt.
Yeah.
So we do find that, unfortunately, there's some demographics that aren't playing in the favor of our seniors, where they're carrying a lot of debt into retirement and then taking on new debt into retirement. So we're dealing with folks that are very stressed about that, and
Yeah.
their cash flows don't provide the ability to cover those payments. So they want to alleviate that stress and
Yeah.
use the reverse mortgage to pay off some of those debts or all of those debts. So that's the first one. The second one, a big trend we saw last year, Jeff, was mom and dad or grandma and grandpa taking out a reverse mortgage on their home to help their kids or grandkids with their first home purchase.
Oh, okay.
I saw this in a large volume last year of reverse mortgages to help a 20-something or an early 30-something
Yeah.
young couple buy their first property.
That's excellent.
Yeah,
That's,
it's a great
Oh,
way to do it.
I can imagine after people watch the show and they get that idea from you, the phone's going to ring off the hook.
It was one of our most popular reasons last year.
And it makes sense, especially in this market.
It's so tough to buy a home right now for somebody in their, they're 20, buying their first home. It's hard.
First-time home buyers need some help. There's no question, and they more and more often are going to their parents and their grandparents to
They
get
sure
that
are.
help. Okay. So we've got a little bit about the process, the appraisal, putting the application, some of the reasons they can use the money. Now, one of the things I get this question all the time is, and we'll get back to this because I understand this is going to be a deep question, but the market sometimes goes up, sometimes goes down. So if somebody gets a reverse mortgage for the maximum amount and the market turns, is there not potential there for that mortgage to actually become worth more than their house? So just leaving it at that, Sean. So I don't want to, I don't want to get into that, but that's one thing I want us to keep in mind. 'Cause
Sure.
I'm sure
I'm happy to answer that at a later time.
the viewers are definitely going to, I just didn't want to forget that because that's a question I get quite often.
Myself as well. I do get that.
Okay. All right. Well, we're going to take a quick break, and when we come back, we'll touch on that and a few other topics.
Great.
Okay. Thanks, Sean.